In this presentation, we'll take a look at an adjustment for AGI, adjusted gross income, related to half of the self-employment tax. Self-employment tax related to a sole proprietor generally reporting on a Schedule C. With regards to the income tax equation, we're down here on line 2. So we have the income and then the above the line or Schedule 1 or adjustments to AGI deductions as opposed to the standard deductions and itemized deductions down below. This would be reported on the first page of the 1040 on line 8A. So we're here on line 8A, which would then be supported by the Schedule 1. So the Schedule 1 here, Part 2, we can see it in line 14. So 14 has the deductible part of self-employment tax attached Schedule SE. So this would be related to someone that has a business. So if they have their own business, if someone has a business, they might set up that business in multiple different ways. If it's a small individual sole proprietor, they probably just have a sole proprietorship which will then be reflected on a Schedule C. If they have a larger business, they might have an S corporation, a partnership, a limited liability partnership, a corporation. And those will be, could possibly be subject to self-employment tax as well. But the general idea here, what will typically be the case, is you'll have someone that has a business Schedule C income, which is going to be reported on a separate schedule, a Schedule C, that will then flow forward to page 1 of the 1040, as you can see here. If you see that being the case, if someone has a separate business Schedule C, there's going to be a lot more kind of complications that will be added. One, we're going to have to do the Schedule C on it. Then we got to think about these self-employment taxes and then the deductions related to self-employment taxes. Now, before we get into this, we kind of got to know why this would be the case. Why do we have this self-employment tax? And it has to do with basically, you think of them as an employee as payroll taxes. So this is when we get into those Social Security and Medicare taxes and the question as to whether or not someone who is self-employed should be subject to having to pay the Social Security and Medicare, which are basically the taxes that we usually call as payroll taxes. And you can see that if you don't allow, or if you say that someone who is self-employed is not subject to Social Security and Medicare, then there'd be a benefit to being self-employed, a big benefit, as opposed to being an employee. So if you had a choice then to say, I want to be a contractor for a business or an employee of a business, and you were able to basically not pay Social Security and Medicare, if you were self-employed as opposed to being an employee, there'd be a huge incentive to being self-employed as opposed to an employee. Now, if you equalize those two things and say, well, you have to pay the Social Security and Medicare anyways, then there's less of a difference between those two things. So that's what we're considering here. The main issue is not the federal income taxes now. It's whether or not you have to pay the Social Security and Medicare and how to equivalate, basically an employee versus self-employed individual so that you're not giving incentives to one or the other. So in essence, if you have a Schedule C business, you'll have to record a Schedule C. Then you'll have to be dealing with the self-employment. And we'll talk more about this when we just talk about businesses in general. So a Schedule C will complicate a return a lot because you'll have these added schedules and deal with the self-employment. So the Schedule SE is the self-employment tax calculation. Now, when you think about the W-2 employee, remember that we had the Social Security and Medicare that was reported on the W-2, but we didn't really have to do anything with it with regards to the calculation of the federal income tax, because the Social Security and Medicare had already been handled by the employer, had already been pulled out of the employee's wages, had been reported to the IRS. All we're doing is reporting that payroll taxes had already been paid. Well, what about a situation where you're self-employed? If you're a Schedule C employee, the IRS basically thinks of you as being an employee of your own business. You're a business owner, you're the employee of your own business, and they're going to say then that you should be paying the equivalent of the self-employment tax as an employee would pay. And so that's going to be the component of it. Not only that, they also say that you are not only the employee, but also the employer. So you're actually going to be paying more Social Security and Medicare because you're paying the employee and employer portion. So typically, if an employer has an employee, typically they report the employee's portion that theoretically is taken out of their wages and they paid it, but the employee paid it, but the employer actually wrote the check, but they took it out of their wages before the employee got it. and the employer has to match their side of it and pay that out. Well, if you're self-employed, the IRS perspective is that you are both employee and employer, and therefore you have to pay not only the employee portion, but the employer portion of basically payroll taxes, which is Social Security and Medicare. Therefore, you'll fill out a Schedule C, and you'll typically fill out a Schedule SE if you have business income, and this will help you to calculate the taxes that you'll be owing related to Social Security and Medicare. So now, unlike a W-2 employee, you'll be calculating both the federal income tax on your return and calculating the Social Security and Medicare tax, rather than just reporting those things that had already been basically, calculated for by the employer if you have a W-2 employee situation. So this form, we'll get more into it later. But the bottom line here is that when you calculate this tax, this is going to be an added tax, not really an income tax, but one that we're going to be reporting on the income tax return related to Social Security and Medicare. And then you get to deduct half of it, which seems really weird. Why do I have to, I'm going to calculate a tax that you're going to make me pay the tax on it, and then I get a deduction for part of it. How did that happen? Well, if you think about the rationale for this, remember that the IRS is basically saying, hey, you're self-employed, therefore you are the employer and the employee. Therefore, you are basically paying twice the amount that you would pay as a W-2 employee, because you're paying the employee and employer portion of the payroll taxes, Social Security, and Medicare. So in theory, what would that look like? If you were a W-2 employee, you'd be paying Social Security tax, which is basically a flat tax, which would be 0.062 or 6.2%. Medicare would be 0.0145. That's how much would be, let's do that again. I multiplied them. It would be 0.62, 6.2%, 0.062 plus 0.0145. So that means in total, you'd be paying 7.65 out of your wages that was withheld from your wages. But the employer would be matching that. So if we multiply that times 2, then it would be 15.3 total taxes that are being taken out of an employee-employer situation. Half of that from the employee, half from the employer. It's a little bit more complicated from that, but in general, that's it. So if the IRS position is that you are both employee and employer, you should be paying the full 15.3% for the basically payroll taxes, Social Security, and Medicare. So you can see it's a little bit more complicated than that. We'll talk more about this in W-2 when we get to Schedule C, but that's basically the essence of it. So that means you're going to be paying the payroll, the taxes, Social Security, and Medicare. However, then you got to think, well, that might be true, but if I was the employer, I get to deduct on my taxes. The wages are going to be deducted already in the employee payroll. I get to deduct the wages that are deducted as I calculate my income. If I'm the employer and paying someone else, right? I pay the employee. I typically get to deduct the wages that I pay the employee, and I get to deduct my payroll taxes. So the half of the payroll taxes that I pay for Social Security and Medicare that are related to my portion, not taken out of the employee check, gets to be deducted specifically as payroll taxes for the employer. And so if you're going to equivalate the sole proprietorship and say that they have to be equivalent, paying the employer and employee portion of payroll taxes, then they should be paying the full 15.3% employer-employee portion. However, they should also get a deduction for the employer portion of that, which is half of it. So that's kind of the rationale of it. So in essence, what will happen then, you got the Schedule C, then you'll have to calculate the self-employment tax, which is basically payroll tax for the employer and employee, twice the employee rate that would typically be taken out of a W-2. Then you'll get a deduction for half of that, which will be reported on the Schedule 1 and reflected on page 1 of the 1040. Now, again, hopefully the software will basically obviously help out a lot with these different forms and calculations, but especially when you're doing tax planning, if someone has a situation where they're saying, maybe I have an option of being a contractor, 1099 contractor versus being an employee. Well, there's pros and cons to both of those situations, and one of the things that are a big factors is understanding a little bit better in terms of the Social Security and Medicare. It's not just federal income taxes that come into play with that decision. You got to think about Social Security and Medicare and the deductibility of different expenses that would be related to those two kind of scenarios. So the amount of the deduction then would be half of the self-employment tax. So Schedule C employee, Schedule C individual who has a business would have the payroll taxes, and half of it basically be deductible. So self-employed taxpayers pay FICA, the FICA taxes, Social Security, and Medicare at a rate of 15.3%. So if you have your own business, Schedule C business, 15.3% general rule of the self-employment tax. 15.3 is similar to paying both the employee and employer portion of payroll taxes. So that's similar to if you had a business, you're thinking about both the employee portion and employer portion of the taxes paid. Self-employment tax is calculated on Form SE, as we saw on the prior slide, for AGI, adjusted gross income deduction of 1/2 of the self-employment taxes is imposed. So then we get to deduct 1/2 of the self-employment tax. So we have the Schedule SE, and once again, we have the tax calculation here, and then 1/2 of it, you can see here, is going to then be pulled forward to the Schedule 1 on the 1040. And then if you look at Schedule 1 on the 1040, there's that 707. Next presentation, we'll take a look at this in tax software, might get a better idea of how this is all put together.